Explore exactly what it takes to become a successful day trader and the power of consistency from the minds of the trading's elite. This is the Beyond the PDT podcast. Here are your hosts, Bryce Toohey and Matthew Monaco.
Hey, what is going on, guys? This is Bryce with Beyond the PDT.
And this is Matt.
Today we've got the honor of interviewing Bob Knight, better known as Turbo Bob on Twitter. Bob, would you like to introduce yourself a little bit?
Yeah, thanks very much, guys, for having me and letting me talk about what we're doing. I've been in the market since 1982 is when I first started trading. At that time, I was a stockbroker in the West Coast. It was the Wild West. And I was a broker for about 10 years, not quite 9 years. And I left the brokerage industry in 1991. I was working with most of the big promoters in Vancouver at the time, and saw that they were making a killing on the stocks, and I was just making 3.3% on commission. So I went out on my own. I had a business partner, and we started our own business, and we got into corporate finance. We had an office in Switzerland, which we ran until 2007. Over there, we had 10 employees. And I've seen everything in the markets. I've been around a long time. I have an MBA in finance. I've raised probably over, 100 million in venture capital. And, I've been around for a long time. I've traded through probably, the big four bear markets. So I've seen both sides of the markets, unlike a lot of, new traders and stuff that may have started after the crash in 2008. They've only seen the bull market, except, of course, this big crash we had last January, which technically was a bear market. But prior to that, nobody, traders hadn't been through bear markets. I've been through four. I mean, I've traded all the booms. I traded the gold boom, the oil boom a couple of times, the tech boom, the .com boom, the Bitcoin boom, pot stocks. There's very few booms I haven't traded, both long and short. So then I was about 4 years ago. I've always been trading in the markets, but more the long term. And I worked, as I said, with a lot of the big promoters, and we did a lot of financings. We did a lot of deals. Some of them you might call now pump and dumps. In those days, that's just the way things were done. And we had some absolutely major wins. My biggest one deal we did at 13 cents. I sold my last shares at 9.5 when it was trading on the NASDAQ at 5 million a share, or 5 million a day, $9.50. So, we've seen it. We know how to do it. I mean, we do technical analysis. We're not really fundamental analysts. We do just based on the on the technical analysis. So that, I think, gives you a good overview of where we are, who I am.
Absolutely. I think it's great to hear you've been through a lot of different cycles in the market and whatnot.
Yeah, and I mean, that's one of the reasons we wanted to have you on here, especially though, is because you've been consistent for so long throughout so many different market cycles and stuff. And it's really inspiring. And the point of the podcast is obviously to try to introduce consistency and just a solid, consistent process into a lot of the new traders' trading style. And you do all that on a daily basis, and you've been doing it for quite some time. So, it's an inspiration for a lot of the people just starting out, and us especially.
Well, it does show that you can survive doing it as a job.
Absolutely. And kind of to that point, so you said you became a broker back in the 80s, or you were a broker. What kind of encouraged that decision?
Well, that's a funny story, actually, because I was only 22 or something like that, 23. I wasn't very old. And I had been living at a ski resort, Whistler Mountain, which you may or may not know about. And I'd been there 4 years. And I thought, well, you know what? It's about time I did something with my life. And so I borrowed a suit from my dad, and I went down to the local brokerage firm because I didn't really know where I wanted to go, but I knew some guys that were brokers and were doing very well. So I thought, okay, well, I'll give that a try. And the funny thing is, I said, well, if I don't get this job as a broker, I'm going to become a mountain ski guide for helicopter skiing, and as luck would have it, I got a job as a broker, and I never looked back.
Good for you. Okay.
Yeah, that's pretty cool. And then, I mean, from there, you mentioned it a couple times, you went into more like the pump and dump sort of space. And I mean, back then, it wasn't considered illegal. It was the whole Wolf on Wall Street situation that was what was going on. So I was just curious if you could, explain exactly what you did in the pump and dump space, because that's how a lot of traders got into trading and stuff. They tried to get advantage of pump and dumps. I know, like Tim Gertani, for example, that's how he made his first million. Back in like 2013 and stuff, he was just getting in on those promotions pretty early, but you were in the whole space way before that, which is pretty cool. So
I was a lot of it when I was a broker. I was I was trading the markets for these guys. I was raising capital for them, doing financings, and then when we went out, we did our own deals. We put them all together, and in those days, you created what you would call a shell company, and then you would vend into it a business of some kind, depending on what was the hot sector that day, that week. If it was a pot, I mean, not now, but now it's pot stocks, but those, was .com or gold, oil, all those, the big commodity plays when they were going. We'd vend in properties or technologies and that kind of stuff, and everybody would get a big position in it. Of course, it's all restricted. I mean, everything was done by the book, by the rule. I mean, we didn't violate any securities laws or anything like that. But then we would go out and we would go on the road and we'd start promoting it. And sure enough, we were good at promoting, and away they would go. And the company, and so the upside was the company got the money they needed. We raised them the capital, and some made it, some didn't, but that's the how startups work. But we did our job. We gave them their money, and after a year or so, then we would be out of the deal, and we'd be on to our next deal.
So from there, I mean, it sounds like you were on a totally different side of trading as you are right now. So from there, how did you discover, actual day trading? I mean, you're primarily a swing trader. So could you talk about how you discovered that, and then how that has evolved into how you swing trade today?
Sure. So then, after I was trading, I've always been in the markets trading, but mostly just our own deals and or big cap stocks. And then in 2008, when the financial crisis, I as a matter of fact, as it happened, I was on the phone to my brother in November of 2008. And I heard on the radio this woman saying, if you are depending on stocks for your retirement, sell everything. And my brother, who was also a financial advisor at that time, I phoned him. I said, this is the bottom of the market. Whatever we got, just, start buying. And then, of course, it came back down in March of 2009. Same thing. I said, this is the bottom. And it double bottomed the way it went. And so that's when I decided, there's money to be made. Trade, just because I sort of finished my career. I wasn't really doing deals anymore. I put away some money, so I was happy that way. And so I just started trading the markets. And then about 4 years ago is when I sort of discovered, the day trading. I wasn't really doing that. I was doing more swing trades or, longer term trading, playing a lot of golf. And then I got into day trading about 4 years ago, and I actually started with as many of your listeners probably know, a guy named Tim Sykes, and realized how these guys worked and how they did it. I knew I could see on the inside of their operations of how they did and what they did. So it just became part of sort of my new career, I guess. I started trading that, and I was very profitable at it. It took me 2 or 3 months to figure it out. I started just with a very small amount and lost it all within 3 months, then got disciplined and started with an account of $15,000 because I didn't want to risk too much, because I wanted to learn how to do it. And then within 3 years, I had grown that to about 450,000.
Wow.
Wow.
Yeah, that's impressive. And I mean, you had an account blow up, and that's a pretty common theme we've been seeing a lot when traders are first getting started. But what's impressive is you said within 2 or 3 months you started getting it, and then on top of that, you've continued to keep that consistency going up to $450,000 now, which is incredibly impressive. What do you attribute to, your success? Do you have any philosophies that you live by that help you stay consistent day in and day out?
This is okay. I'm going to give you the magic to trading: never fail.
All right.
And so you might want to write this down. Now, what I do is, and I've always done this, especially when I was in the junior markets trading those stocks. When I buy a position, my philosophy is to sell some at the bottom, some at the top, and all the rest in between. Because you just never know, especially when you're day trading, where these stocks are going to go. If somebody's going to pull the rug out, it's going to get whacked. And you'd be surprised if you look at my trading record, how many times I top tick stocks. And the only reason I top tick them, it's purely coincidence, because I'm always selling all the way up. And eventually you're going to sell at the top, and then it rolls over and you bail out of the balance when the stock comes off. So it's a good strategy for traders to use, is not to hold for the big win. You always have to be paying yourself along the way. But in that same token, what we teach in the Turbo Trading Room, it's our philosophy there is when we're in a trend, we trade the trends, and when we're in the trend, we stay in the trend. And we're looking to trade for, multi-dollar gains. We're not looking to trade pennies. We don't, we're not looking to scalp stock. I mean, we do some scalps, but we're not looking to scalp stocks for 5, 10, 15 cents in and out. That's not our style. We get in a trend, we stay in it, and we teach people and we take them through the trades live, and we teach them how to stay in the trade, because that's where you're going to make the big money, is by staying in the trade. And so that's my philosophy. But in doing so, I sell some at the bottom, some at the top, and I sell all the rest in between.
I mean, I live by the philosophy too. I mean, and I hear it all the time. It's just you never go broke taking profits. And I mean, that's essentially what you're saying here.
Correct.
I think it's really important for because I think every new trader wants to hit that home run and just hold it and hold it and hold it until it goes from $3 to $20 instantly. And that, I think that does attribute to a lot of blown accounts.
Yeah. And one thing you also mentioned is your trading style and your room's trading style. You guys are avoiding the scalpy type trades and focusing more on the swing type trades, or you're just joining the trend. Do you think, in your opinion, it's easier for a beginner to start trading that way and just hop in and try to swing these and join the trend versus scalping them quickly for 5 or 10 cents here and there?
Absolutely. Now, we do both. We have 6 moderators. 2 of them, Tyler and Sonny, they're more focused on the lower priced day trading. My own personal style is I just trade whatever the market is giving me in that cycle. So right now it's low price stocks day trade. That's what I'm trading. But if you look at our swing trades that we put on, in December we were shorting stocks, big cap stocks, and trading them for $20, $30, $40, $50 moves. Now and then in January we went long again some big trades we did there, also $20 and $30 moves, $50 moves. But to answer your question, I think it's much easier for new traders to not trade the real volatile stocks, not to trade, let this market open for 10, 15 minutes, let it trade itself out. You can always buy on the first pullback. And that's one of the things that we also teach, how to buy on the pullback, because there is some rooms that, and this is their style. I'm not saying it's right or wrong. It's just the way they trade. At the opening, they go long stock and all their followers jump in and it pumps the stock, and the stock, rockets up, and then everybody sells and it comes off. And they're finished within the first 10, 15, 20 minutes of the market. So new traders, don't start trading until the market's been open for 15 minutes. You can see what the trends are. You can find out what's hot. And there's lots of time to buy on pullbacks. Yeah, you might miss the first, 10, 15, 25 cent move or even $1 move. But if it comes back and then and you're looking at the chart pattern, and the chart pattern says buy, it's because it's the first pullback. You can ride the stock for a long ways up, and you've not gone through all the risk of the wild swings in the first 15 minutes of the market. So you can, as a new trader, you can not trade for first 10, 15 minutes and not trade the real volatile stuff. You can find, we always look for stocks that are trending up, and they get in a channel and they stay in the channel, and you find a good channel, and the stock it can channel up all day long, and it's a low risk, low stress trade, and that's the best place for new guys to start.
Couldn't agree with you more there. And like you said, those stocks that are extremely volatile. I mean, I know when I first started trading, I would just hop right in, and that's first 2 or 3 minutes of the day, and I know that's when I lost all my money. And as soon as I started kind of during the times that I would wait for the market to give it some time, 10, 15, 20 minutes to let the stock kind of give some kind of direction, that's when I was a lot less likely to lose my money from what I've noticed.
Yeah,
yep.
I mean, same here as well. When you're starting out, and I think Bryce and I both struggle with this a lot, is on Twitter, you see all these rooms that you mentioned, and they're done in the first 30 minutes of the day, and the head people of the room are making big money and stuff. And there are some pretty crazy moves you can make in the beginning of the day, but it's so much more random. And I mean, not that I'm a successful day trader by any means yet. I hope one day, to be. But where I started actually starting to find some consistency is I would wait for the first 15 or 30 minutes of the day, like you said, wait for all the randomness, all the pumping from these chat rooms to get out of the way. And then, like you were saying, buy on first pullback or join a trend or something. And even if I don't swing it overnight, you can still make a pretty good day trade just by doing that. And in my opinion, it's a lot safer because you can set a pretty solid risk, and you're not going to get dumped on by these chat rooms. Someone's not going to randomly pump it against you if you're shorting. And I mean, it's a lot less stressful, and you can make easier gains with a really defined risk reward.
Absolutely correct.
So, Bob, what encouraged you to get into the teaching and mentoring part of trading?
It just, I was, prior to me, so the TurboTrading room's been open for 1 year, and prior to that, I was in a group of guys, 6 guys, and we were all trading. We're just on WhatsApp chatting away and helping each other out and watching the trades. And these guys said, why don't you start a room? There's a lot of people out there that would like to know all the information that you have locked away in that brain of yours. And so I did start it a year ago, and it's been a lot of work, and I mean, but I enjoy it. I enjoy teaching it. I like dumping all the knowledge I have on everybody. And you can ask me any question about anything except nanophysics, and I can talk on it for 30 minutes, and and especially the stock market. I mean, in the stock market, I've forgotten more than most people know. So, there's a lot of knowledge in here. I'm happy to spread it around, teach people how to do it. And I enjoy it. I mean, it's a great environment, but also having the room, we always get lots of great ideas from some of the other members in the room, some of the other moderators. So not being by yourself is, you're not lonely. You're not looking around for ideas. And because we find all the good ideas. We've got 6 moderators that are putting out ideas, and members give us ideas, and we find those trades all the time. So by putting this whole thing together, it's just, and the other thing that it's done, it's really made my trading much more disciplined, because now I have a lot of, we have followers, and my ideas, our moderators' ideas, mine and the others, when you say something that has an impact on people's lifestyle, on their lives. So, but we do get a lot of people say, Bob, you've changed our lives. The stuff that you do and you tell us, and you've shown us, you've changed lives. So that's always very rewarding. We get these kind of testimonials from our members on how we've helped people out. So, it's worthwhile. It's rewarding.
Absolutely. And I think you brought up something that's extremely important for a new trader, is that having somebody else or a group of people to talk to, bounce ideas off of, that are looking for the kind of the same general goal as you, I think that's extremely important. I mean, it's helped a lot. Matt and I being roommates, we've been able to bounce ideas off of each other, and it kind of makes you hold yourself responsible, because especially like you said, you have people who are looking up to you and learning from you, and it makes you a little bit more disciplined doing that.
Yeah. And yeah, 100% correct in that. But, the other thing one of the things though that we teach in the turbo trading room, and this is a bit different than a lot of other rooms talk about. And one of the things other people say, or, the mentors that say is, you have to go out and learn how to find the stuff yourself, and, don't just follow other people. And I absolutely disagree with that premise, because we have 6 guys in our room, and plus other members as well, but we have 6 guys, very talented people that all have big experience and know the markets. We're finding all the stocks. I mean, there's very few stocks that are trading that day that are the hot stocks, or, they're in play, or the swings that we're not talking about, that we're not writing about. I mean, we're on top of all this stuff. So what it does for new members and new traders is it frees up their time. They don't have to go out and try to find these stocks, because we've already found them all. We're looking at them, we're trading them. And so it really helps new people. And the other thing, of course, that let's go back a step, because the other thing that we do in our trading room, I think, which is a lot different than other rooms, is before we do a trade, we're announcing it. Okay, stock XYZ at this level, I'm going to enter it. I'm going to take a trade, and then this is going to be my stop. This is my entry. Here's my targets before we do the trade. So we never front run our members. So members don't have to go and find their own deals. They don't have to worry about following us, because they already know what our entry price is, where we're going with the stock. We announce, okay, a stock, let's say it's at $2, we take it at 2 for the breakthrough 2. Okay, I'm going to be letting a little go at 2.25. It gets up to 2.25. Okay, I'm going to sell in here, and then I sell. Okay, sell a quarter of my position. My next target looks like it's going to run to 250. I say, okay, so we're always coaching people how to stay in the trade, but we're also trading alongside with them. Actually, what we say is we never front run our members. You can trade behind us, ahead of us, with us, or even against us. We don't care. But at least all of our members have a fair chance to trade the stock exactly the same we do.
Yeah, that's a really interesting take on it, though, because, when we get started, a lot of times Bryce and I and other new traders join chat rooms, and all you hear over and over again, though, is, don't follow people's alerts and stuff. So it's really interesting that you have the complete opposite philosophy, and it kind of makes a lot of sense.
Well, and I also think it's interesting, too, though, that in my experience, a lot of these chat rooms tell you don't follow, but kind of expect you to follow them. You join that room to follow and learn from somebody, and they tell you not to do it, and knowing that everyone is probably going to follow their trades.
Yeah, and especially because a lot of times the people who do follow their trades and then make money, they put up on this pedestal, and then anyone else who tries to follow their trades, they're like, why are you following my trades? You shouldn't be doing that in the first place. So it's like a total double standard there.
Yeah, but of course they're saying that don't follow my trades, knowing full well that they are, and that as soon as they buy their stock and put out the note that that they've bought the stock, then all their members are going to jump in and try and clip it. It's already moving, and then the guy just the traders just sell into it, and the members they get stuffed. So that's not our philosophy. Our philosophy is never to front run our members. We're always way ahead of time, way ahead of time, alert where we're trading, what we're going to trade, how we're going to trade it.
And so even doing that, do you believe that it teaches your members a lot still, either way, that you're teaching them, why to be in that trade?
Well, that's the thing. You see, they don't need to go out and find their own trades. They can follow us. And as a matter of fact, as we go through every trade, we're talking live. We trade, we're in the trading room all day long. We're not just flitting in and out once in a while, or we're not there just for 30 minutes. You know, people are on the mic all day long talking about the trades. And if we're not talking about trades, if we're not doing a trade, then we're talking about chart patterns. We're doing webinars. I have a list of 50 items right now that I need to talk about, not on this call, 50 items that I need to talk about, doing a webinar on in our trading room, how to find your niche, bear and bull patterns, lessons learned from mistakes, support and resistance, how market makers work, trade ETFs, candles, what you should know, how to swing, and the list goes on and on. And I when it's a bit slow, then I get on the mic and I'll talk for 20, 30 minutes on these very topics. And how to hedge your position, how to take emotion out of the trades, how to find and I just did one on how to find stocks. So it's, you don't need, and I think it's a mistake. I just absolutely believe it's a mistake for people to try and not to follow us and to try and go out and find their own trades, because we're already doing all the good ones. So you're wasting your precious time by searching all over the internet for these stocks when we already have them already up, and guiding people through them. So, and we're talking about the patterns, and we teach the patterns, and what's working, what's not working these days, and because the market's always changing. And so it's by a process of osmosis that even though they're following us, they're not following in the sense they're behind us, they're trading alongside us.
That's awesome. No, that's great.
And I mean, there's not really a better way to learn anything in life than following someone that's already successful. Like a lot of the best business people, the best traders, everyone, I mean, when they first got started, they went out and found a mentor and someone who was already successful, and then learned from them, oftentimes copied them, and then, eventually maybe they tweak it and make it their own. But that's just how all the great success stories begin. Yep,
100% correct. There's lots of books out there on, that biographies and autobiographies on, the most successful people in the world, for sure.
Absolutely. Now, what kind of trading advice would you give to new traders who might be looking to grow a small account, or a relatively small account, like you had done when you took that $15,000? Do you encourage paper trading? What's your advice on that?
Well, the thing is, I wasn't ever really a new trader. I mean, when I started day trading, I was already 30 years experience in the market. So I understood markets, but you do need to find a good room to be in, a good chat, with good mentors, good teachers. It doesn't hurt to start with, a paper trading and get a handle on it. The thing about paper trading, though, is that it's not like real trading. So it's a good place to start, but if you think you're successful paper trading, it doesn't translate into good trading in the market, because now all of a sudden you're actually risking money. So, and we've got lots of good videos on how to manage risk and on how to manage emotions. So what you have to do is, now if you're going to start out, you really want to start probably with no less than $5,000. A couple of grand is bare minimum, but probably not less than $5,000. If you're under that, you're going to get killed by commissions.
Absolutely. I've learned that the hard way a couple times.
But the thing is to trade at a level, at a risk level that there's no emotion in the market. So when I first started trading, and I had this $2,000 account, not that 2,000 made a difference in my life, but I didn't want to blow $10 or $15 or $20,000, give it away. So I wanted to learn how to do it. And I started, and then once I sort of got rid of all that money, but I realized, I figured out, sort of where I was at, and I funded it for $15,000, even though I had $15,000 in there, and I had 6-to-1 leverage. I would just trade 100 shares, 200 shares, of any price stock, or maybe if it was, under 3, I'd buy 500 shares. And so that there was no emotion in the trade. I wasn't emotionally attached to the money that was in the trade. Now, I'm very jealous of my money, don't get that wrong, but when I'm in a trade, it's as cold as ice. There's no emotion whatsoever. And in our trading room, it's exactly the same. It's the same thing we preach. It's strictly business. There's no emotions. There's no high fives. There's no ups and downs. We're just on a even keel, and and so to do that, to be able to do that, you have to start at a level where the trade, so the emotions are going to stay out of the trade because you're not risking too much money. If you look at my profit chart, you'll see it's fairly flat for the first year or so, and that's and flat, but going up, because then I started at 200 shares, then I started at 500 shares, then I bought 1,000, and then I started trading $10,000. So I mean 1,000 shares, and then I started trading in a dollar value. I thought, okay, each trade is going to be, my maximum trade is going to be 10,000, then 20. Now I trade each trade sort of $40,000 to $60,000 at risk per trade.
Yeah, I mean, I think that's incredible advice. And we'll make sure to link your profit chart in the show notes on the show on our website. But something that I struggled with and almost got in a lot of trouble with was as my account slowly started getting bigger, I wanted to take more and more size. And, when I was in those positions, I started to get more emotional, and it would make me want to cut a loss before it got to my risk level, simply because I was using too big a size and I was thinking about the potential gains instead of the losses that I was actually putting on, which is what a lot of people struggle with. When they come out with a $2,000 account, they're going to go into a position with just obscene risk that they're not even thinking about. And it's going to hurt them a lot because they want these massive gains. And that's the reason why people blow up. They're just trading with too much money and too much leverage when they first get started because they want it now. And what they should be doing is just using small size, like you were saying. And, at the time when you started, you were already successful. You had a successful career, and you got in trading, and you were only trading with 100 shares at a time, which should go out to all the listeners. Like, it's okay to start small and just get the hang of things and, become emotionally detached from your money before you can slowly start sizing up, and then you can see those big gains.
Yep. And it brings up another good point that goes along with this theme. And one of the things about trading, this is, for the new traders as well, and for everybody really, is that each trade is a trade unto itself. There's no relationship, there's no correlation, there's no relationship between the trade I just did and the new trade I'm going to go into, even if it is the same stock, even if I'm, traded it out at the top and it's pulled back and I'm going to rebuy. There's no relationship between those two trades. You have to be, and this is a very important point, that each trade is just its own trade. And one of the problems that new traders fall into is they do a trade and they make a bunch of money on it. And so then, whoa, this is cool. And so now I'm looking for the next trade, and they find one, and then at the same day, and they trade that and they make some more money. And all of a sudden now their risk tolerance, because, I can lose some money because I'm already up. So I don't mind doing a so-so trade in hopes that it'll go because I've made money, and so I can risk more. Absolutely the wrong attitude to take. You cannot do that. You have to take each trade, analyze it, and trade it on the merits of that trade, and not because, it's a so-so trade, but I'm up on it, and I'm up from my last two trades, so I'm going to gamble and I'm going to take this trade. Absolutely going to blow up your account if you do that. So very important that you keep each trade separate. Each trade is on its own, and you'd never look back, say, okay, I'm up or I'm down. That has no bearing on the trade that you're going into. If you've made a bunch of money, and actually this is one of the best things to do, is you've made a bunch of money on a couple of trades, shut your screen off, go away, come back tomorrow. And the same thing if you lose money. If you lose, you should always have a risk total amount you're going to lose in one day. And if you hit that level, shut your computer off, go to the gym, go somewhere else, go for a run, take your wife out for dinner, whatever the case may be. But you have to walk away from the market, because the emotions will kill you. That's what kills traders.
So it sounds like, and as it should be, trading discipline is extremely important to you.
Absolutely critical. We're super disciplined in our chat room that way as well. Like I say, we all business. There's no chat. There's no how are the Seahawks doing. There's no high fives. We're just strictly disciplined trading.
Good, and I think that's something that's very important too, because you can have, whether you've got a winning strategy or you've got the right idea, if you can't discipline yourself, you're not going to be able to keep your money, and that's the most important part of trading.
Yep, correct.
And emotions especially. I'm struggling with it. I'm sure every new trader is struggling with it. It's kind of the last hurdle to get over before you finally become consistent.
Seriously, it is. You can, again, even if you know what you're doing, it's still, you need to get around that emotional barrier. And once you do, I think that's, in my opinion, from what I've seen, that's what makes a successful trader.
And the other key point also to be a successful trader, our other philosophy is there's 3 types of trades in the turbo trading room. This is my own philosophy, is small wins, small losses, big wins. So we never go into the trade looking to make a small win. We go into the trade looking to make a small loss or a big win. And and one of the problems that new traders have is that they go into a trade looking either to make a small win or a small loss. And what ends up happening is they're not disciplined enough, and the market goes against them. Instead of being a small loss, it goes to a big loss, medium loss, or a big loss. And so now they're freaked out and they're a bit scared. So next time they're green and they're up at 10 cents, they go, oh my God, thank goodness I'm green, I'm selling. And they make a small win. But that was their strategy. You'll blow your account up because there's no way you can make enough small wins to cover your big losses. You have to stay in it. You have to be going into a trade with 2 thoughts in mind: small loss, big win. If it ends up being a small win, okay, I'm happy. I'm happy to take any profits for sure. But that's not our goal. Our goal is always to make big wins. You have to let your profits run, because if you don't, the losses that you might go against you, and in some of these losses you can't stop, you can't help. I mean, it's in a trend. The way you go, all of a sudden the rug gets pulled out, stock drops $1 or gets halted or whatever, drops $1 in seconds, and it does end up being a big loss.
That kind of hit home with me, because that's how I didn't completely blow the account. I withdrew the funds before I did that, but that's how I really lost some money when I first started. My goal was to have, either a small win or a decent sized win or a small loss, but those small losses always turn into a bigger loss. And then as soon as the next trade I was green, just any bit of money, I'd be like, oh, I'm cutting it off here. And like you said, you're never going to make enough on small wins to cover for the medium to bigger losses. Yeah,
it doesn't work that way. You have to let the stocks run, and you sell some at the bottom, some at the top, and all the rest in between, but it's going to be a big win for you. And if it's not, at least it's a small win. And
absolutely.
So that helps you along.
Yeah, and I think a lot of traders, I mentioned this a little bit earlier, they just don't even think about losses. So it's great that you're going in with a mindset, I'm looking to take a small loss or a big win, because a lot of people are just looking for the big win. And then before they know it, their account's down 10%, 20% because they just weren't even thinking about taking a loss in the first place.
Correct. Yep.
So I'm going to change gears a little bit, but I'm curious what your stance is on the PDT. I imagine you have quite a few people in your room who are currently kind of stuck below the PDT. So what are your thoughts on that? Are you in favor of it? Do you like the PDT? Do you feel like it hinders traders' progress? Or when you're first starting, do you actually think it's kind of a good idea to limit how many trades you're taking?
Well, first of all, let me say this about that. I'm in Canada, so we don't have PDT. So I was never subject to the PDT rule. If I had been, then I would have funded my account for more so that I didn't fall under it. What I think it is an absolute travesty for traders. Trading is difficult enough. And if you're in a trade and you can't sell because of PDT, but the trade's going against you, it's absolutely a crazy regulation that whoever decided that they should that they should monitor people's money so that they can protect themselves, so government can protect you from yourself, is absolutely crap. I mean, I'm glad I'm not a U.S. citizen and subject to PDT rules. I love America. It's a great place, greatest country in the world, but PDT, I don't get it. I don't get it at all. And I don't get it why U.S. citizens put up with it. There's so many jurisdictions around the world where you can open an account and trade without PDT. But you see, one of the problems is with America, God bless America, I love it, but one of the problems with it is people they tend to be isolated. They don't tend to look outside of their own country. Where a country like Canada, we have to, because we're just a small little country and we need to go other places to make money and stuff. We don't have enough in our own country. Where United States, you've got everything you need. It's all there. So they're reluctant to look outside the country. You've got to go to countries like, go to the Bahamas, open accounts there. It's a Commonwealth country, strong rule of law. It's people, brokers there. They're regulated. They can't steal your money. I mean, this is a fear that a lot of Americans have, is that to get outside of their comfort zone in the United States, there's all these people they want to do nothing but steal your money in these offshore jurisdictions. Absolutely not true. First thing I'd do if I was an American is I'd be looking to open an account somewhere outside of America so that I was never subject to PDT.
Interesting take. Interesting. And I think, again, we the only issue I ever had with an offshore broker was the leverage got right to my head because I was under PDT with a very small account, but it was nice being able to take trades, as many trades as I wanted to.
Yeah, for sure. I mean, and those brokers, offshore brokers, giving you 4-to-1, 5-to-1, 6-to-1 leverage on your money, 2-to-1 overnight. So the platforms they have are good. The settlement is good. The speed is good. I mean, I have an account with a company called SureTrader, and It's in the Bahamas. And a lot of people I talk to, I don't know, I've heard such bad stuff about them. I'd never do anything with them, blah, blah, blah. I've been with them 3-4 years now. And yeah, like any other platform, every once in a while it crashes. I mean, even the big platforms crashed. I know all these guys that are in Thinkorswim, they've had nothing but troubles with that. A few others. I mean, even some of the big ones go down. Ameritrade, or like you can't get trades executed because the platform's down. So SureTrader's not. I mean, but in the last 3 years, I haven't had one problem with that with their platform. So solid platform, solid company. I mean, I don't know how solid the company is. I mean, I always take money out of it. I don't want to leave too much sitting there. But I take it, bring it home, repatriate it, pay my taxes. But PDT, I just can't understand why people put up with it.
We feel the same way.
Feel the same way. I mean, we're both from the United States, and I have broken the PDT just countless times because of the exact example that you gave us. Like, you go into a trade and then they're like, oh, we're protecting you from yourself. And it's like, no, you're not. Like, I can't get out of this trade. Now I'm just losing money to avoid this stupid rule that doesn't even make sense in the first place.
Yeah, exactly. So for new traders, that's what I would do. I would look around the world to find a place to open an account. Now, one of the problems with that is that the United States also has gone pretty hard against some of these offshore countries with and it's, Europe is a good example. I mean, they're not even offshore. These are all, major industrialized countries, but the United States has beaten them up because people have their money there, and the U.S. needs all the taxes they can collect. So in retaliation, a lot of these countries don't even want American accounts. So it's not as easy as I make it sound that you can go out and find a place to trade. But if you can, that's what I would suggest.
Yeah, I mean, I think that's good advice, and it's an interesting take from someone who is outside the United States on their views on the PDT and how how'd they go about avoiding the PDT if they were forced to be underneath it.
Yep.
Yeah, so we're going to work on wrapping this up a little bit, but we're curious what's next for you. Are you working on anything big right now? You have your TurboTrading room. Do you have any big plans for that or your trading going forward?
No, we're just trying to grow TurboTrading. We'd like to just, continue to have the community grow and keep teaching people and bring them in and, just help build the community into a good, strong, solid place to trade in where you can feel comfortable. Where it's just business. As a matter of fact, one of the things that we get from a lot of the ladies that are trading in our room is they say, this is a very female friendly room. There's no swearing. There's no. We keep the testosterone down to a bare minimum. Our style of trading doesn't tend to attract those, young. Big gambler types of traders that are looking for scalping 10 and 20 cents. So, and so it's just it's good. And we're just happy to build that kind of community where people can feel safe and welcome to trade and ask questions and never worry about thinking that it's a dumb question or, that they need to not talk about anything because it's, because people will beat them up. So, we're just happy to get along. We just keep to ourselves. We don't bash anybody on Twitter. We're not going after anybody. We just try to run a good, solid community where people can feel safe and comfortable trading.
Yeah, it sounds like a great community to be a part of, and especially for, like you were saying, women and new traders. That's great because there's not a lot of women traders out there, and I'd love to see more.
Yeah, exactly. Yep. We've got some great ones in our room that are doing really well for sure. So.
That's awesome. Well, we'll link your guys' chat room in our show notes for anyone who's interested. And unless if you've got anything else to say,
can I go have a Chardonnay now?
Yeah, absolutely.
Go right ahead, man. It's the weekend.
Bob, thank you very much for being on with us today. It was a pleasure interviewing you, and I think we've got some really good advice, and we're really excited to get this out there.
Okay, guys, thanks. Yeah, send me the link. And I'll put it out on my Twitter feed and in our room and stuff like that as well.
Awesome.
Yeah, sounds great, man. Thank you.
Yep, thank you very much.
Have a great weekend.
All right, everybody. That wraps up this episode of Beyond the PDT with Turbo Bob. Thank you for listening, and we can't wait to see you again next week.